I don't think people understand the impact of Cathie Wood. Cathie Wood is a name that resonates throughout the financial world. As the founder and CEO of ARK Invest, she has become a prominent figure. She is known for her bold investment strategies. She focuses on disruptive innovation. Love her or disagree with her, one thing is certain. When Cathie Wood speaks, people listen. Cathie Wood has a unique approach to investing. She identifies companies that are on the verge of transforming industries. She is a big believer in technology and its potential to reshape our world. Are you worried about the future of the market? Cathie Wood is known for her optimistic outlook. She believes in the power of innovation. However, she has recently issued warnings about the market. She sees trouble ahead. She believes a reckoning is coming. Her words should not be taken lightly. Inflation is one of her biggest concerns. She argues that the Federal Reserve has kept interest rates too low for too long. This has fueled asset bubbles. She predicts a period of high inflation. This will impact both businesses and consumers. She believes it will be painful. Another worry is the level of debt in the system. Governments and corporations have taken on massive amounts of debt. This is unsustainable. She warns of a potential debt crisis. She believes it could trigger a market crash. Cathie Wood is also concerned about complacency. Investors have become too used to low interest rates and market gains. They are not prepared for a downturn. She believes a correction is overdue. It could be severe. I bet you didn't know the domino effect. Implications for everyday investors. Cathie Wood's warnings have far-reaching implications. Everyday investors need to take notice. Her predictions, if true, could significantly impact their portfolios. It's essential to understand the potential consequences. Knowledge is power. If inflation surges, the purchasing power of your savings will erode. The cost of goods and services will rise. Your money won't go as far. This can have a devastating impact on retirees living on fixed incomes. It can also hurt families trying to make ends meet. A market crash would wipe out trillions of dollars in wealth. Stock prices would plummet. Retirement accounts would shrink. Many investors would see their savings decimated. This could force people to delay retirement. It could also lead to financial hardship. A debt crisis would have severe consequences. Interest rates would soar. Borrowing would become more expensive. This would hurt businesses and consumers alike. It could lead to an economic recession. Job losses would likely follow. You need to hear this if you're an investor. Cathie Wood's warnings highlight several risks for investors. It's essential to understand these risks to make informed decisions. Ignoring them could be detrimental to your financial well-being. Be proactive in protecting your assets. One significant risk is the potential for a bubble in certain sectors. Wood has expressed concerns about valuations in areas like technology and real estate. These sectors have experienced tremendous growth, but this growth may not be sustainable. A correction could be swift and brutal. Another risk is the increasing level of speculation in the market. Many investors are making risky bets. They are driven by fear of missing out, or FOMO. This can lead to irrational exuberance. It can also create asset bubbles. When these bubbles burst, the consequences can be severe. Geopolitical uncertainty is another factor to consider. Global events such as trade wars and political instability can impact markets. These events are unpredictable. They can create volatility. It's essential to stay informed about global affairs. What's something people don't know about opportunities in uncertain times? While Cathie Wood's warnings are sobering, she also sees opportunities. Even in times of uncertainty, there are always areas of growth. Savvy investors can capitalize on these opportunities. It's about recognizing potential. One area of opportunity is disruptive innovation. Despite market volatility, technological advancements continue at a rapid pace. Companies at the forefront of these advancements have tremendous potential. Investing in these companies can be lucrative, but it's crucial to do your research. Another opportunity lies in identifying undervalued assets. During market downturns, some assets may be oversold. This creates opportunities for investors to buy low. These assets may rebound in value over time. Patience is key in these situations. Finally, market corrections can present opportunities for portfolio rebalancing. This involves selling overvalued assets and buying undervalued ones. It's a way to manage risk. It's also a chance to reposition your portfolio for future growth. Why are there not more people talking about inflation? Inflation is a significant threat to your wealth. It's a hidden tax that erodes the purchasing power of your money. As prices rise, your money buys less. What you could afford a year ago may now be out of reach. This is why it's crucial to understand inflation and its impact on your investments. One of the primary drivers of inflation is an increase in the money supply. When the government prints more money, it devalues the currency. This leads to a rise in prices as businesses pass on the increased costs to consumers. Another factor that contributes to inflation is supply chain disruptions. When there are shortages of goods or services, prices tend to rise. This can be caused by various factors, such as natural disasters or geopolitical events. Inflation disproportionately affects those on fixed incomes, such as retirees. As prices rise, their purchasing power diminishes. Inflation can also erode the value of savings accounts and bonds. To combat inflation, it's essential to invest in assets that outpace rising prices. Stocks, real estate, and commodities have historically served as hedges against inflation. However, it's crucial to remember that past performance is not indicative of future results. This is why you need to pay attention to the tech surge. Cathie Wood is renowned for her belief in the transformative power of technology. We are on the cusp of a technological revolution reshaping industries, driven by AI, robotics, and genomics. The exponential rate of innovation is key. Advancements are happening at an unprecedented pace, creating new industries and business models. Companies harnessing these advancements are poised for growth. Increasing adoption across sectors drives optimism. From healthcare to finance, businesses are embracing technology, creating a massive market for tech companies. Investing in technology can be rewarding but risky. Technology companies often experience high volatility. Valuations can fluctuate significantly. A long-term investment horizon is essential. I will never underestimate diversification after learning this. Diversification is a fundamental principle of investing. It involves spreading your investments across different asset classes, sectors, and geographical regions. The goal of diversification is to reduce risk. By not putting all your eggs in one basket, you can potentially mitigate losses if one investment performs poorly. One of the key benefits of diversification is that it can help smooth out returns over time. Different asset classes tend to perform differently in various market conditions. For example, when stocks are down, bonds may be up, and vice versa. By diversifying your portfolio, you can potentially reduce the impact of volatility on your overall investments. Another advantage of diversification is that it can enhance your potential for growth. By investing in a variety of asset classes, you can gain exposure to a broader range of investment opportunities. This can increase your chances of capturing gains in different market sectors. When diversifying your portfolio, it's essential to consider your investment goals, risk tolerance, and time horizon. A well-diversified portfolio should align with your overall financial plan. It should also be rebalanced periodically to ensure that your asset allocation remains in line with your investment objectives. You need to hear this if you're an investor. In today's rapidly evolving financial landscape, staying ahead of the curve is paramount. The sheer volume of information available can be overwhelming. But by conducting thorough research, you can make more informed investment decisions. Knowledge is power, especially in finance. One of the first steps in conducting investment research is to identify your investment goals. Are you looking for long-term growth, income, or a combination of both? Once you know what you're aiming for, you can start researching investments that align with your objectives. Next, it's essential to understand the fundamentals of the companies or assets you're considering investing in. This includes analyzing their financial statements, understanding their competitive landscape, and assessing the strength of their management team. In addition to traditional financial metrics, it's also crucial to consider macroeconomic factors that could impact your investments. These factors include interest rates, inflation, economic growth, and geopolitical events. Staying informed about these factors can help you make more informed investment decisions. Why are there not more people talking about the importance of a long-term perspective in investing? Investing is a marathon, not a sprint. It's essential to adopt a long-term perspective. Market fluctuations are inevitable. There will be ups and downs along the way. But by maintaining a long-term focus, you can ride out these fluctuations and potentially achieve your financial goals. One of the biggest mistakes investors make is trying to time the market. This involves buying and selling investments based on short-term market movements. However, timing the market is notoriously difficult, even for seasoned professionals. Instead of trying to time the market, focus on time in the market. The longer you stay invested, the more time your investments have to potentially grow. This is particularly true for growth investments, which may take time to reach their full potential. Another important aspect of long-term investing is patience. Don't panic sell when the market experiences a downturn. Remember that market corrections are a natural part of the investment cycle. By staying the course and remaining patient, you're more likely to achieve your financial objectives.